Hi, everyone. Good afternoon for those who are in the Americas, and good evening for those who are in Europe, and maybe good night for those who are in Asia or in India. Great to have all of you here. Great to have my panel with me. I think you can see everyone. So I will just quickly introduce them. They were all my students in ESSEC in the past 6-7 years. So we have Eric from Patek Philippe in New York.
Hello. Hi.
We have Tarika, Employer Armani in New York as well.
Hello.
And we have Patricia in Toronto, working now for Estée Lauder, right? And LVMH. And we have Marcos in Mexico, working for Montblanc, Latin America, and Mexico. Hi, Marcos.
Hello.
Great. So first, I would like to thank them for their presence today on a Sunday. But I know that Sundays are usually good. When I used to do these master classes offline, I used to do it always on Saturday afternoon in New York. So we kept the same timing this time. I would like to thank them. I will start with the master class, and then they will be back to answer your questions, all of them. So let me just tell you a little bit the process. I will start with a master class from 45-50 minutes on the topic, and then I will introduce the panel, ask them maybe 1 or 2 questions to start with, and then we will open the Q&A to all of you, to all the audience. So if you have questions that come up during my presentation already, you can write them in the chat room, in the chat box. All right? So without further ado, see you soon, my dear panelists. I will start the presentation and start maybe with a quick presentation of myself, even if I have probably a lot of students tonight, but former students. To make a long story short, I have a double working experience since I worked 25 years in the industry, as you can read, and I've been teaching now for 17 years, mostly in ESSEC Business School, but a little bit also in Asia. The other thing you should know is that I am currently in France, but I am normally based 50% of my time in China for the past 10 years. So, and I'm teaching also in China. And if I have some Chinese students tonight, they're also welcome. Voilà. But I have some clients a little bit all over the world, and doing things online at the moment saves me a lot of travel time. Also, I miss travel a little. What you may be interested in is my social media activities. I'm quite active. It started actually with COVID, well, a little bit before with my ESSEC masterclasses on YouTube. But I started my own channel on a Chinese platform, which is Bilibili. It's a kind of a YouTube video sharing platform for young people in China. But I repost these videos on LinkedIn, so some of you I know follow them. They are like short educational videos on luxury lifestyle, luxury branding, luxury hotels. And voilà, the agenda for today, my panelists here. So I will talk to you a little bit about how the luxury industry is doing in the Americas, certain focus on the US. And I will explore certain perspectives on why there are not more American luxury brands, and probably come with some positive outlook for everyone. All right, so let me start with maybe a quick view on the current situation, which, as you know, is not bad. I have tried to list here some of the structural reasons and cyclical reasons why the outlook for luxury in the US and Americas is globally good. So the structural reasons, I think they are quite well known. I will remind you that there is a lot of ultra high net worth individuals in the region, still the majority, and I think they generally got richer during these last 2 years. In terms of demographics, Of course, when I'm in Asia, I talk about bigger demographics, but still 1.05 billion people. It's a lot of people between North America and Latin America. Cyclical reason, I think, interestingly, in a way, travel restrictions. You have had some restrictions to travel during the past 2 years, even if now it's easier, may have had a positive impact because, like in Asia, it favors local consumption. And I think also the region globally is less dependent on Asian travelers than Europe. So there is not the same impact. GDP is doing well, like in the rest of the world. And I think one reason also could be that luxury brands believe in the markets, in the American markets, and they are making retail investments, in particular in the US this year. I will show you a few interesting cases. Also moving into new areas like rich suburbs or vacation resorts. And what people tend to forget, because it's true that there is a lot of discussions about Chinese consumers and Asia, but the USA as a country remains often the #1 luxury market for many luxury brands. If we rank it by country and if we compare the USA to China mainland. All right, so yeah, ultra high net worth individuals. It's true that they are growing in Asia, but as you can read here, there are still 46% who are based in North America. So this is obviously an asset for the luxury brands in this region. In particular, if you remember this kind of pyramid where you see the different segments of luxury consumers, even if the business of luxury brands need all kinds of clients, including the bottom of the pyramid, but still the top of the pyramid represents on average a relatively important amount of spending per person. And generally speaking, at the moment, the ultra high net worth individuals, those who are considered as beyond money, they tend to increase their luxury spending faster than other categories, in particular with the development of bespoke and personalized luxury products, vintage, etc. So this is one thing. Regarding the dynamics of luxury retail, which help, I think it's a sign of the confidence of the brands, because you see that even if I think a brand like Dior has already 48 stores in America, in the USA, they opened recently a huge store in Scottsdale, while Hermes opened its first store in Troy, Somerset Collection, Detroit. I think Roseville in California and other places are also quite dynamic. And Louis Vuitton opened, I think it's a new store in Texas, in Plano. There is that new mall, maybe Eric and Tarika will talk about it later on, which seems to grow, with Hermes also opening stores and other brands in New Jersey. Gucci at the Hamptons, and I could mention also Aspen, Colorado, and other great places. And maybe more traditional locations, such as Miami Design District, where Louis Vuitton opened its second store. Chanel opened a very large boutique as well. In New York, we have recently Dior, which opened a kind of pop-up store on 59th Street, because they are renovating and probably doubling the size of their flagship store on 57th. So it shows also their confidence in the market. Chanel opened, I think, its first boutique in Washington City Center, DC. So this is, of course, positive, as the importance of still offline luxury retail for luxury brands. Some numbers. I picked a few recent reports, the report that ends Q3 for most brands, meaning end of September 2021. So here what we see with LVMH is that they posted actually in the previous quarters, starting end of 2020 already, very high sales increases in the here it's in the US, and almost as high as in Asia. So that is quite remarkable. And you know, they are doing a comparison with 2019, not with 2020, because 2020 it's a little bit too easy. But the fact that it increases so much against 2019 is positive, even if, to be honest with you, I'm a numbers person. It's a little bit still misleading, because what you should really do is average 2020 and 2019 and look at the increase, because otherwise there is a little bit of catch-up. But still, it's very positive. And because of this, if you look at the global LVMH revenues distribution by continent or by country, because they isolate the United States here, the United States represented for the first 9 months 25% of their global sales, which is big. And as you see, it's bigger percentage-wise than the 2 previous years. So in fact, for LVMH, the USA is increasing proportionally. Of course, Asia globally is a little bit bigger, but I assume that for LVMH, US market is probably as big, if not slightly bigger than China mainland, because in Asia you have other countries. So this is quite significant. If we look at another brand which is doing extremely well, even if the brand is less strong in America, Hermes, they posted amazing increases in the US, also compared to 2019, almost the highest increase actually in the Americas at large in 2021, the first 9 months. If we have a look at Kering, what I show you here is the breakdown of their global sales per continent, and North America 28%, so it's very significant, very close to LVMH. Probably also US is almost the #1 market for Kering if we isolate China mainland from Asia Pacific. And if I look at 2 star brands of Kering, particularly Saint Laurent, for Saint Laurent, absolutely clearly North America is their first market in the world by far, and maybe Gucci as well, at least probably as strong as China. Richemont is not different. They posted a very, very significant increase. Although it's compared to 2020, but because of this, the percentages are huge, 123% at constant exchange rate. And this is also, as you can see, the strongest increase compared to other continents. If we look at American brands, and I chose Ralph Lauren, which had, of course, a very bad year in 2020. For them, it's only 3 months because, no, it's 6 months because I think they close end of March, so it's 6 months of 2021. They had an increase of 71% versus the 6 months of 2020. It's a strong rebound, and I checked, it's mostly in America at large, in the Americas, that they had this increase. And I will finish with Estée Lauder, which also posted for the last 3 months, because they closed their accounting year end of June. So for their first quarter, which is Q3, they posted the highest increase, also percentage-wise, in the Americas. So globally, a lot of good news. We will see with my panelists what could be the reality, going a little bit more maybe by market, because we also have Canada and and Latin America, and I insisted more on the US. But I think globally, the situation seems to be quite positive, much better than last year for sure. Alors, I would like to say a word of China, because my wife is Chinese. I'm very close to China market, and as you may have heard, you know, a lot of attention on China, and a lot of consultants predicted even a faster increase of luxury in China, making people think that you know, the future of luxury was really in China and not anywhere else. And I think it's not true, honestly, and I'm well placed to say it. It's not true at all. This is a very complicated chart, but I will try to explain it to you. So first of all, you see what was the situation pre-COVID. In 2019, travel retail was very big. So Chinese consumers represented 35%, but only 11% was achieved in China mainland. And for the Americas, around 30%, which is quite consistent with what we have seen recently. What these consultants here, it's Bain, predicted recently, again, still recently, is that by 2025, Chinese consumers would represent potentially up to 47 to 49%. To give you a figure, I think in 2020, it has been around 40, 42. And this is, of course, huge. And if we follow this logic, in percentage, Americans, nationality-wise, would reduce, of course, and Europeans even more. Currently, I personally doubt a little this evolution. I think there is an excess of optimism on the future of luxury in China, or at least a possible excess of optimism. And I'm not saying it to be nice with an American audience, but I really believe it. And there are certain reasons for that I can very quickly share with you. I think at the moment there is as many opportunities as threats for luxury brands in China. And I think maybe, you know, people who are a little far, either based in Europe or America, tend sometimes to overestimate the situation in China, to only see the positives, because Chinese government is very good at marketing its positives, but there are obviously a lot of opportunities. I'm not saying the contrary, but there are some real threats, and these threats have kind of increased in the past 3-6 months. So it's something quite recent. There are first some political issues. It's a bit sensitive topic, but I think I can talk here. You know, some people even talk about a soft cultural revolution taking place, and who knows which consequences it may have on luxury consumption, because the government can absolutely, if they really want to, put some barriers. It's not the case at the moment, but still some threats on excess consumption of new rich, and this could hit luxury brands. There is also the Chinese economy, which last year seemed to do extremely well in comparison to the rest of the world. This year, we have some clouds and some gray areas. You may have heard about the real estate situation, companies which are close to bankruptcy, level of debt, and we also have some political, you know, issues that affect, for instance, the internet sector. And there is at the moment in China, people don't know it so much, a lot of big companies that lay off people, young people in particular. So a lot of young people find it hard to find jobs and are not so positive about the future. So, you know, luxury consumption is also connected always with a certain optimism. And if this optimism disappears or, you know, is obscured by certain real threats, you know, the very rich will continue to spend, I'm sure, but the middle classes in China, which were very important, if you look at the way luxury brands achieve their objectives, the middle classes, the lowest tiers of the middle classes could maybe change a little bit their behavior. So I would not today be as optimistic as many people are on China, and I think luxury brands should maybe, in a way, look at it differently and realize that the USA and the Americas at large could be a safer bet for luxury in the future. Alors, for the reasons I just mentioned, which are some possible turbulences and risks in China, even if at the moment it's not the case as we speak, but also because there is a kind of paradox which no one has really looked at openly, which is why Chinese consumers have this appetite for luxury brands. Is it sustainable? Because in the end, there is a lot of cultural disconnect between European luxury brands or American and Chinese culture. And this is actually my next part. I would like to decode a little bit for you the art and social-cultural foundations of luxury in general, and in particular in the Americas. So if we remember very quickly, before being a business, luxury probably always existed, so we can look at it as a cultural phenomenon. But what is today the luxury industry developed primarily in Europe. So it was a European cultural phenomenon, which is largely, as you may know, coming from Italy, France, the Renaissance. But all this movement was itself nurtured by the history of Europe, which brings the Greek and Roman empire and civilization in the equation. All this is actually reasonably familiar to Americans because of the history of population in America, but it's totally disconnected with Asian culture. I just wanted to remind you this. And even more importantly, now I would like to remind you that art and luxury have always been strongly connected, associated, to the extent that even initially, not so long ago, during the Renaissance, art and luxury were only one entity. The initial luxury craftsmen were artists. And luxury and art have always grown hand in hand, in particular in Europe in the past 300 years. I would like to show you this complex chart, which I'm working on for a long time. I try here to explain how much luxury is following art evolution, but also social-cultural evolution and geopolitics even. So what you see in green, and I went back to the Renaissance, is everything which is connected with Europe, the old Europe, Western Europe. Everything was happening there until the first and second industrial revolution. The geopolitics were totally in favor of Europe. Artistic movements were all driven by Europe, and luxury developed in Europe. All this is logical. Things change after World War I, but slowly. European economical decline started, but artistically speaking, interestingly, during the First and Second World War, modern art, Art Deco, Cubism, Dadaism, Surrealism, developed more in Europe than in the USA, even if some artists were coming to New York, but it was still driven by Europe. And it's only after the Second World War that everything changed. And what you see in red is that, in fact, since now 80 years at least, everything is taking place in the United States, in the Americas at large, in particular, the development of art. Modern art has been replaced by what we call contemporary art, avant-garde artists, starting with pop art in the 60s, etc., Andy Warhol, Basquiat, street art, all sorts of modern art, contemporary art movements like conceptualism, minimalism, and there are so many others, but they all were born in the Americas. And all the artists were either Americans or sometimes foreigners, but they came to the US, they immigrated, or they were influenced by these American artists. At the same time, economically, politically speaking, we entered after the First World War the USA Golden Age, which in a way brought also the whole American continent behind. The Fourth Industrial Revolution was still largely born in the United States. So, you know, there is something interesting here. Why not more American luxury brand? We're going to talk about that. So China time, Asia time is maybe coming, but for the moment, in terms of all these important elements, everything has really taken place in America in the past 80 years. So in particular, after World War II, all the artists who are today very famous and sell their art pieces in auction sales at very high prices, they are all American contemporary artists. I name a few here that you all know, I think for the most part, whether they are still alive or not, and they cannot all fit on this slide, but they are actually some of the big names. And you realize that they are all nurtured by American culture, because all these artistic movements were also born following socio-cultural evolution in the Americas. So that's an important thing to keep in mind when we think about the relationship between art and luxury. And a good evidence of that is that the USA remains the growth engine for the arts market in terms of auction sales. You know, New York, of course, particularly driving American market. So even if Hong Kong, Beijing are growing, London is also significant, but still 40% of the transactions take place in America. And for one good reason, a lot of the high value art pieces can be attributed to American artists. And in America, there is a good balance between supply and demand in these auction sales. So that's also something to keep in mind. Also, don't forget that luxury has always been driven by cultural innovation. This is at the heart of my courses in ESSEC, by cultural innovation, by art, of course, also, and by social-cultural evolution. So I try to simplify it by showing you again in green the important social-cultural evolutions which were taking place mostly in Europe until the Second World War. Initially, the birth of tourism, perfume, outdoor activities, transport revolution, largely in Europe, and it helped a lot of European luxury brands develop based on these cultural innovations, because they answered the changes brought by these evolutions. And after World War II, in fact, no more significant social cultural evolution took place in Europe. I'm sorry to say it, but all the important movements took place in America, as you should know, starting with music. I did a lot of videos on the beatnik and hippie movements, because it's also for the hippie a little bit my childhood. And this is completely an evolution of jazz, rock, pop, and of course, later on hip hop, etc., heavy metal. Well, about the cinema as well, because you had the golden age of Hollywood, about space, about Wall Street and the second Gilded Age in New York, the computer era, the third industrial revolution, even the jeans revolution with CK, Calvin Klein. Social media started in America. Streetwear, of course, is totally something which was born in America. So there is like a question mark, because how come we don't have also some green elements below, meaning some famous luxury brands born in America and leveraging on these American social cultural evolutions, since we have also the artistic movements to support them. Alors, let's look a little bit at this question and look a little bit at what happened during this period in terms of American luxury brand or potential luxury brand. Why actually American brands did not take the lead in luxury, in fashion, in beauty post World War II and particularly post 60s, because a lot really happened after the 60s, you know, when the middle classes also increased a lot initially in America. Alors, his streetwear for me is really an enigma, because if you decode streetwear, everything has American cultural foundations. California, surf, hip hop, rap, Bronx, skate culture. It's a little bit connecting with workwear, which is also totally an American fashion concept. Music, all born in America, and Japanese street fashion, yes, but I know extremely well all these Japanese designers. Take, for instance, Fujiwara. You see his picture, fragment design. Like all this generation, he was inspired by America. He started his first brand after having spent 6 months in New York. So all this is, and you know, it's not just about fashion. It's a cultural statement. It's a very strong one, and it's totally nurtured by American culture. And not only, because if you remember, streetwear aggregated different sectors, in particularly sports brands and sports categories, and mostly, again, categories were dominated by American brands and sports, which are the most popular American sports. So the enigma continues, and the sneaker, which is the star product in the streetwear and which has gained a lot of momentum in all European luxury fashion brands. The sneaker is born in America, and today, even today, I was covering recently some sneaker fairs in Hong Kong, in Shanghai, and you know, interestingly, young Chinese people, when they collect limited edition sneakers, they are looking at American streetwear artists or streetwear designers, and still often collaborating themselves with Nike or Vans or other American sports brands. So everything is here totally driven by American culture and American companies. So how come it didn't benefit more American luxury fashion brands? Alors, you know, I worked for Ralph Lauren, so I was well positioned to think about that. So I try to remind you a little bit, you know, the timeline. And again, we see on the left that all the most famous European luxury fashion brands were born before World War I or before World War II, and for the last one in the early 60s. But there are a few exceptions, of course, Armani, Dolce & Gabbana, but for the most part, you know, the big names today that you see in the luxury streets of New York, they are all born before. In America, especially after the 60s, you had a proliferation of creativity. Not only Oscar de la Renta, which everyone remembers, but Ralph Lauren, Calvin Klein, DKNY, Supreme, of course, Kate Spade, Jimmy Choo. They are British, but they really developed in America. Remember Sex and the City and the Academy Awards. So we can look at it as an American brand almost. Tory Burch, Tom Ford, you know. So why don't we have potentially more strong players who could leverage, like I said, on all this positive cultural and artistic environment? Actually, we also have, it's a group I'm quite familiar with, but which many people in Europe don't really know. VF Corp has an amazing portfolio of brands. So they are more, of course, premium or sportswear brand or workwear brands, but they are great brands. And again, they were all founded almost after the 60s. So it shows to which extent there was a lot of creativity and innovation in the fashion apparel industry in particular. Actually, I found this ranking of the largest global apparel companies. They are almost all American. They are not luxury, of course, but you have in this ranking the two new groups composed by Michael Kors and Coach around Tapestry and Capri. You have Burberry here and Hugo Boss, but you see that in terms of size, power, all American. To talk a little bit about Latin America, there's also I added the Brazilian group Alpargatas. I met them. They were my licensee many years ago for Pierre Balmain, and as you know, they have great brands, including someone we call the Giorgio Armani from Brazil, who is Holz Club. A very nice designer I met in Sao Paulo. Alors, question I have not answered yet. If we look at beauty, it's a little bit different, but fundamentally it's the same trend, except for, I like to say, the three genius women, Helena, Elizabeth, and Estée Lauder. All the strong, premium or mass premium beauty brands were created in America after the 60s. So we have the same phenomenon. They are not all here, but I named. But in beauty, things work differently. As you know, Estée Lauder was able to acquire a lot of these brands. And today, Estée Lauder, if we think about prestige beauty, selective beauty, can be looked at as the #1 or #2 player in the world. So in beauty, but beauty, is always between mass and luxury. So what didn't happen in the traditional luxury, fashion, accessories happened in beauty, where this creativity, this positive environment led to the creation of one of the biggest group, Estée Lauder. Even if L'Oréal, of course, they are really competing and are for L'Oréal luxury about the same size. So beauty, everything went relatively well, and it's very good for the American luxury beauty industry. In the hotels, interestingly, it's the same. I am fascinated by hotel. I teach in hotel schools, so I can talk to you about hotels a lot, but very quickly, America is the country that invented the concept of hotel brands. It's very simple. And it started with Hilton and Sheraton before World War II. But here again, same principle. It's after the Second World War that we had this proliferation of great brands. And here, it's not a traditional luxury sector. Everything remained American, and M&A worked in the right direction with the #1 group, not luxury only, but Marriott. With Hilton Group, we created 2 luxury hotel brands, Waldorf Astoria and Conrad, etc. Hyatt, which developed the brand as well. So we have Intercontinental. So we have here unquestionably a success with American luxury or luxury and premium hotel groups. So the question is really why we don't think more about American brands as stronger in the luxury industry. And I think that the problem is really in the hard luxury and in fashion and accessories. I have one explanation. Of course, I call it the LVMH syndrome. Alors, first of all, I would like to remind you that today in the luxury industry, concentration and the critical mass of concentration is on the rise. Clearly, big is beautiful, no question. and it's more and more the case. So what you see here, we are talking about personal luxury only, so it includes beauty. You can see that the 7 biggest companies, of course, only one is American, it's Estée Lauder. They are representing this year possibly close to 50% of the entire personal luxury sector, and LVMH alone 21%. And this has almost doubled, because I follow these numbers for now many years. 12 years ago, the same 7 actors represented only 25% of the entire personal luxury sector. So as you can see, except for Estée Lauder, this concentration movement, this M&A, was largely driven by European brands. And European brands, even if they didn't all make acquisitions, because Chanel and Hermes did not make acquisition, but they found ways to grow much faster than maybe what could be their possible equivalent in America. Alors, first, you will be surprised. Do you know how many American luxury brands have been acquired by LVMH? Do you think you need the fingers of one hand, 2 hands, or more to count? No one knows. I will tell you, you need 4 hands, because in the last 20 years, out of the 78 maisons totally controlled by LVMH today, 18 are from the Americas, and all luxury sectors represented: fashion, jewelry, beauty, hotels, and wine and spirits. All sectors represented. Now, of course, you have certain brands which are, there are quite a few brands which are in the wine and spirit sector, but still 18 brands. How many European brands have been acquired by American groups? Well, Estée Lauder made a few acquisitions. It's the only one. It's the only one. Well, you can say Capri and bought Versace for Capri Holding, and Tapestry, no, Tapestry bought American brands. So this is really one phenomenon, first. And second, of course, they didn't acquire the worst brands, and they acquired brands which enabled them to seduce Gen Z and millennials, because many of them are millennials and Gen Z brands. Okay, they also apparently took advantage more than American brands of the hip hop and streetwear culture, because they hired, LVMH in particular, the biggest number of creative directors, which are either American or issued from that culture. And it's not finished. In terms of co-branding and collaboration with streetwear brands, it's not only Louis Vuitton, it's not only Dior with Kim Jones, it's practically all LVMH brands have been collaborating with these American streetwear brands or American designers. It's quite, impressive when you look at it. It looks like the entire ecosystem that developed in America has been used primarily by European luxury group, and primarily LVMH. And last but not least, if you look at collaboration with artists and designers, I mean, contemporary artists, those who are still alive, or even those who are no more here, again, you find, I think, LVMH probably at the very top of the pyramid. They are leveraging totally on all these contemporary artists. So it is something to keep in mind. Well, I'm not even talking about the association with Google Cloud, which maybe will make a European company ahead of all other fashion brands in terms of accessing big data and implementing big data analytics. So I think we have the LVMH syndrome, clearly. But I think it's a bit more than that. And I would like to explain to you what I call the human factor. In fact, you know, most of these European luxury brands, 40 years ago, they were not big. Absolutely not big, believe me. Even Hermes was not that big. And they were not really looked at as luxury initially. So what happened, I think, which explained that situation, that development, is in Europe, we had some investors, not many, primarily one, Bernard Arnault, followed by François Pinault. To a certain extent, at Richemont, the Swiss the family from South Africa. We also had certain families who were shareholders and maintained a strategy of you know, comforting the luxury strategy, the long-term luxury strategy, like the Bettencourt at L'Oréal, the Prada, the Armani, the Wertheimer. So actually, whether they were listed or not, because it's not a question of being listed here, it's a question of having investors who are dominant, and even if the group is listed, who can impose a long-term luxury strategy. Because for LVMH, it took time. Dior, when I remember Dior, I had some students from ESSEC who joined Dior in America in 2004. Dior was a very old brand in America and was very weak. And what LVMH has achieved with Dior in 15 years is absolutely incredible. But it did cost a lot of money, and if you don't have a dominant shareholder and you are in the hands of the stock market, maybe they would not have been able to do that. So I think this is the big difference, and it's probably what has been missing in America. I used to know the CEO of Coach. He was very smart. He was actually European, Portuguese. He had worked for LVMH, L'Oréal in Asia, and he was victim of the stock market because when the results were not good enough for 2-3 years, you know, he lost his job. And the case of Tiffany for me is, you know, 2 years ago, maybe some of you remember, when I gave the last masterclass offline, ESSEC Masterclass offline, I was hosted by Cartier, because the CEO of Cartier America is an ESSEC. At the mansion on the last floor, I predicted, I didn't know, I had no information. I predicted in September 2019 that Tiffany would be acquired probably by LVMH. I just didn't know when, but I was sure they would be acquired. And the news came 3 months later. Why? Again, it's the reason I explained to you. I'm not saying necessarily LVMH will only do great things with Tiffany, but they will be able to have a more long-term strategy. Voilà. So last, quickly, before we start the panel, I also wanted to remind you a strength of the American market, which is its retail infrastructure, and the fact that most of the retail disruptions, but also the retail reinventions, have taken place in America for the past 150 years. And luxury requires strong and sophisticated retail infrastructure. Now also e-commerce, marketplaces, and everything was born in America and has been often an innovation that took place in the Americas at large, because Canada, even Brazil, we can mention some innovations. So very quickly, you know, I'm a retailer, I'm from a family of retailer, retail is in my blood. So for me, this is something I've been following all the time. If we think offline retail, we had 200 years almost of offline retail disruptions in America, but innovations. And in terms of formats and type of locations, everything constantly evolved with always innovations. And in particular, within these different formats, the very first catalog, 1846 Tiffany, the very first store opened by Bloomingdale department store on 3rd Avenue in New York, 1861. Avon Direct Sale, 1886. The first chain store business. This, you know, you remember maybe what was it called? Atlantic and Pacific Tea Company. It developed 1900, and then same with offline. The Christmas catalog of Neiman Marcus in 1929 was an amazing innovation. Walmart, etc. So a lot of innovation. I cannot resist reminding you the amazing timeline of American department store at large, because we should pay tribute to Holt Renfrew in Quebec, who was the very first, founded in 1837, the beginning. In the US, it was Bloomingdale's. And you see here how, you know, the difference between the dates where the companies were created and some of the flagship store openings. I mean, this never stopped. And there is one that was very innovative. Unfortunately, they closed in Sao Paulo, called Daslu, which I have visited 10 years ago. Voilà. So you had all these innovations. And last but not least, department stores are struggling. I know this is true, but they are obviously also trying to react. I could not help looking at what Neiman Marcus is doing to try and empower with technology their sales associates. And I think this will be successful. It's more about omni-retail, online to offline, offline to online. They do great things. Saks had started the same 2 years ago when they empowered their sales associate using Salesfloor. Recently, they seem to have taken a different direction with the spin-off of their e-commerce business, which could be more dictated by kind of stock exchange strategy, but we will see. At least, you know, they are reacting and trying to find solutions. But I could not help also, you know, looking at 25 years of online and digital retail innovations. Again, here, there is the perception that maybe China now is more innovative. In fact, what China did extremely well is they adapted a lot of these models to the Chinese reality. And it's true that eBay failed in China. But they also took a certain lead in social commerce, largely thanks to the influencers who are more important for cultural reasons in China. But most of the innovations took place in America. All the formats from B2C retailer, Amazon, eBay, and all the flash sales platform, the resale, the rental platform, the very first rental platform, Rent the Runway, direct business model, New York, peer-to-peer, all American, B2B marketplaces, beauty boxes, AI-driven subscription styling platform, Stitch Fix. And now they are moving to more B2C marketplaces. All this is quite impressive. I try to show you a little bit the timeline. It started very early. Most of these, Canada also with Essence, 2003. You see how innovative were all these people who are behind these online retail innovations. And it continues. It continues during the crisis. We had these new marketplaces. We will see if they are successful, but inspired by probably a Stitch Fix, they created Behold and the Yes, for instance. You have Flair, which had a successful financing recently. People looked at it and they rediscovered B2B marketplaces, Watchbox, etc. So my conclusion, in fact, it's that for me, truly, America, driven by United States, of course, has more future than many people think. Our future for European luxury brands. But I truly believe that if some investors understand, the business of luxury, normally there is a lot they could do in America with American brands, like Estée Lauder did in the beauty industry, like in the hotel industry. Why it doesn't happen also in the fashion accessories industry? Voilà. So I wanted to conclude on that with maybe a kind of roadmap, because I think that there is such a great cultural ecosystem for American brands that you just choose, but a culture of disruption, a cultural melting pot, amazing values that can be inspiring. And why not coming back to Made in America, or at least Dreamt in America? There are so many great mottos and slogans that I think it's possible. But understanding the business of luxury, and not, of course, underestimating the power of LVMH, is also something important. And I hope this presentation brought you a little bit the two sides of the coin. Voilà. So thank you for your attention. I will now introduce the panel. And if you don't mind, I will start asking one question to each panelist, and then we will open the discussion, and you will be able to ask me or ask them questions as well. So I will maybe start with Eric. So Eric, it's not so long ago you were in ESSEC, you were my student. Can you maybe just say a few words about what happened post ESSEC for you? And in your case, because you are working for the luxury watch brand, there is still, I often say that, luxury brands need to remain culturally relevant. And it's true that traditional watches are more and more disrupted by the fact that people don't need a watch to read the time, and also by smart watches. So what is your view on that particular issue?
Sure. Well, thank you so much, Denis, for inviting me to be on today's panel. I really appreciate it. And hello to everyone out there. Really enjoyed the presentation. Following ESSEC, I spent about 6 months looking for a new position, and landed in client development, which was something that was very closely aligned to what I was doing before in store management. And it was kind of something out of the leading a sales team and a flagship boutique that really interested me. It was that connection with clients. And so, of course, COVID hit, and then I had to transition. But I think it was a good one for me because I landed in a product category that I'm very passionate about, which is watches and jewelry. In terms of the consumer behavior and how it's changed regarding smartwatches, I think everyone was very particularly worried about what smartwatches would do to the mechanical timepiece. But what we have found is that although smartwatches are definitely becoming a much larger part of the picture, we're finding that consumers are purchasing both fine timepieces and smartwatches, which I think became logical after some time, but it wasn't immediately obvious, because if you're shopping in the, let's say, 1,000 plus price for a fine timepiece, you most likely have a couple $100 left over for a smartwatch as well. So, it's very interesting. I think something else that we've seen over the past couple of years is that Gen Z and millennials are the two generations that are acquiring the most wealth and purchasing power, and they are becoming increasingly interested in mechanical timepieces. So I think that's very good for the industry. And historically, broadly speaking, the Swiss watchmaking industry moves at a very slow pace. And so they've been slow to receive the smartwatch integration, but there are some brands doing that. So I think that there's some innovation happening there where they're trying to combine the best of both worlds of technology and mechanical. But I think there's a very bright future for luxury watches. In fact, the Swiss watch exports at the very high end are the ones that are accelerating the fastest. So I think what we're going to see for the very high end timepieces is going to be very exciting in the coming months.
Wow, looking forward to it. Thank you for this positive answer. I'm very happy for you too. You are in the right position.
Thank you.
Tarika, you're working in buying merchandising for Armani, which I know very well. So you are more close to the product, to fashion. So maybe could you rebound a little bit on what I mentioned about, you know, the future also of luxury, of American fashion, premium or luxury? Do you think both for American brand and European brand, there is what is the driving the growth in spending in the United States right now? What are the dynamics?
Sure. So yes, it's true. I am very, very passionate about ready-to-wear and accessories. And I know that a lot of the big luxury brands, a lot of their growth comes through in smaller value products, and that the ready-to-wear is still sort of considered part of the aura of the brand. But there are still people who want to buy the ready-to-wear and want to wear the ready-to-wear. So there really still is a lot of creativity, a lot of passion, a lot of growth that you can have in the luxury market. First, I'll say one thing about American luxury brands, that what you said today was very fascinating. It is a big question mark. But I do think there are obviously Americans who believe in the idea of a luxury brand, but they're doing it on a much smaller scale. And so I think that it exists. It's just not, they haven't figured out yet how do you scale it up and how do you make it into a big worldwide presence. But in terms of what's happening now in ready-to-wear, it's very, very fascinating what has happened during this pandemic time. Because I think no one expected apparel business to rebound the way it did in the middle of lockdowns. People are stuck at home. They have nowhere to go, but yet people were purchasing apparel. And I think part of it had to do with economics, that we were stuck at home. The people who were fortunate enough to still have jobs, their income was coming in. They had very few ways to spend. Obviously, they couldn't go. They weren't going to work. They weren't going to concerts. They weren't going to on trips anywhere. So the savings rate in the U.S. I think was like hit a record high in the beginning of the lockdown, and there was a lot of pent-up demand. And if you're sitting at home in front of your TV or in front of your phone, in front of your computer, what can you do? Go shopping. So I think that happened a lot. There was so e-commerce. There's a big bump in e-commerce, and even though you are sitting at home, you still have to wear something when you're at home. And so we started to see this rise in this idea of like the lounge wear, the athleisure. Something you would want to be comfortable in wearing at home. So I think that's how that's how the ready-to-wear business rebounded. And then when vaccines became more readily available, and in the U.S. We opened up our markets, we were able to go out. There was this desire to go out and to do things and to go to events. And since you started to see people shopping more on the special occasion side. So buying dresses, heels, tuxedos, formal wear, weddings are rescheduled. So there, and again, there's still we still have a lot of restraints. You still can't do a lot of other things. So what people might have been thinking about and deciding to spend their time on, that what became available was still very restricted. And so clothing is still something that people are choosing to do. And I think like going forward, we'll still see people spending on ready-to-wear, on shoes until things change in terms of like international travel.
So far, so good for you, right? You're already
yes.
Good to hear too. I'm sure we'll come back to you because there will be maybe questions regarding fashion, but sure. Maybe Marco, sorry. Marco, you are the only representing today, what is south of the United States. So even if you are not covering, I know the entire region, but can you talk a little bit to us about, I mean, it's the biggest region in total in terms of population, right? 500 million, I think, or more. So can you tell us a little bit about the luxury consumers in your region and at Montblanc, and more generally speaking, how do you see the current situation of luxury with also with COVID and with travel restrictions? Did it help as people could travel less?
Yes, in Latin America, we have a market that is very much looking into the US, especially Miami. Miami is always the reference. People from every country will travel there. So this situation with COVID helped us as Montblanc as a brand, but I have information from the rest of the brands. It was a very good opportunity for us to start capturing this client that was buying abroad. And we had a challenge to step up and improve customer service in local markets. People many times prefer to buy locally, but they don't find the same level of service, and they don't find the same product. As you know, and you mentioned before, we used to rely a lot on licensings, and so we had local productions that was not always the best quality. And we also rely on distributors. Most of the brands don't have like local presence in the countries. Mexico, of course, it's a hub. It's the most important in the region, and we take care from Mexico to the rest of the region. But the client was not finding the same image, the same product in their local market. So the biggest challenge was to improve this and to develop during these 2 years the countries, the clients that used to travel, and start and convince them to buy locally. And I think we did a very good job. For example, in Montblanc, we are one of the top markets that when we see the recovery versus 2019. And I see the information from the rest of the brands in Richmond, and the situation is similar. We are like top 3 in recovery versus 2019, because we were able to capture a client that was buying in the US and in Europe. It's of course it's not so relevant as with China, but the situation is quite similar.
And from your opinion, it's true, you know, all the optimism around Asia in general, China, but also Southeast Asia. Do you think luxury brands maybe did not put enough investment and attention in the past few years on your region? Do you think they should do more?
Yes, I think Mexico is an exception. If you come to Mexico, you will see the same retail environment that's in any city in the US or in Europe. But in the rest of the continent, if we go south, we see that luxury brands look a bit old. You always have like 2 or 3 collections, the old collections. You are not up to date. Even the visuals in the airports. So there's a lot of work to be done and investment to be done. I think almost every brand is lacking a bit of presence in the region.
Okay. Well, I wish they listen to us. Thank you, Mark. Let's move temporarily north to Toronto, where I heard it's not very cold actually, right? At the moment, Patricia.
No, it's a beautiful day, and yesterday we were at 20 degrees Celsius, so it was a very rare occasion for us.
Is it good for business?
I mean, okay, people want to be outside, I guess, when it's that warm out in the winter.
Okay, so Patricia, I think for you, because you work in the beauty industry since you graduated from ESSEC, right?
Yes.
LVMH, then back to Estée Lauder now with MAC Ecommerce, right? So can you tell us a little bit about the beauty shoppers in Canada? And I'm sure you know a little bit about their behavior in the US. So how would you compare, and how do you see the dynamics of beauty shoppers in Canada?
Absolutely. So what I'll say first is, being in Canada and being a smaller population, Canadians and in most companies tend to be quite tied to our US counterparts and work very closely. And we really work to localize to make sure things are quite relevant for Canada versus the US, because as close as we are, there are some very distinct differences between both countries. So what I will say in general about our consumers here in Canada is, I would say we're actually much more conservative in our spending in Canada. And I think that this really came out during and became quite prevalent during the pandemic, where in Canada, makeup sales, and I know this happened in the US, but everything just dropped. And recovery has been much slower in Canada versus the US. So, you know, before the summer, the US really entered that recovery stage of makeup and cosmetics. Canada has really been much more slow moving. And so we are really seeing that kind of distinction between the two markets right now. Canadian shoppers also, you know, in the makeup industry tend to like a much more natural makeup look and are really intrigued by anything that is green beauty. And that's also kind of one of the big distinct differences that I've seen between the two markets. The other thing I'd like to touch on, and it's a good thing and a bad thing for me specifically in e-commerce, but Canadians actually really still like to shop in retail and in store versus e-commerce. So I think that is also a big distinction that I've seen between the US and Canada, where e-commerce has sustained in the US. It's obviously dropped with reopenings, but as you would expect, but in Canada, we're almost back to those 2019 numbers of how consumers are shopping in store versus in e-commerce. And this is not necessarily specific to luxury, but I think will give a really good indication of Canadian mindset. Is the Retail Council of Canada did a survey about holiday shopping here in Canada, and over 70% of participants in it said that they would be shopping in store versus online. And so that is a really big indicator of how customers in Canada love that retail experience and still want to go in store. Whereas I'm not, you know, and this is what I'm observing from the US, and when I'm speaking to my counterparts in the US, that's not the same in the US.
I understand. So your challenge, being in charge of e-commerce now, is to bring them from offline to online, and not
it's sustaining, yes.
Okay. Well, thanks for that update on beauty and Canada. I'm sure we may come back to you. So now I would like to open the Q&A to the audience. And I don't know if we have questions already in the chat. I think I see questions here. Can you go back to the presentation? We can see your desk now. Okay. How should I do this? I need to go back to my, oops. Kanika, can you tell me how I can go back to my presentation?
Hi, you can see your presentation and at the bottom of your screen on the right-hand side. You can just go back to PowerPoint and it should open your presentation.
Oh, yeah. So, no? Yeah,
no.
Okay. Got it. It's good? No?
Not yet.
No, it's not that. It's another one.
It's this one. Perfect.
No, it's not this one. It's another one. So you still don't see it
We can
anymore.
see your thank you slide, so it's perfect.
Okay, very good. So do we have questions in the chat?
Absolutely, it's on the chat. If you scroll down, there is the questions there.
Oh yeah, let me see. So Denis, can you go to the presentation? About the increasing number of luxury consumers in USA, are they mostly Chinese consumers living in the USA? Increasing number of Chinese consumers in the USA, are they mostly Chinese consumers? What about the Chinese diaspora? Because that's the way we should call them, right? They are living in different parts of the country. There's a big diaspora, I think, in California, but we have no one from California tonight. New York as well. Do you have maybe Eric in your clients, a bit of the Chinese diaspora from New York?
So I think the question is more, do we have Chinese nationality that are living in the US and shopping luxury, correct?
Yes, that's why I called it diaspora, because
diaspora.
they are.
Sure. Yeah, absolutely. I think it's definitely concentrated by region, for sure in the New York area and in Northern and Southern California, for sure. You know, we don't really disclose numbers by nationality, but I can tell you that for sure it's obviously come to, like, we used to have the mix of the Chinese tourism and the Chinese local national. And of course, now that we've been so many months without essentially international tourism, we now are very clear as to what contribution these Chinese nationals contribute to our business. But yes, it's not limited to luxury by visitors. It's also local Chinese nationals purchasing luxury for sure.
I don't know if you can detect it, and I don't know if it's the case, but is it like in Europe where you have sometimes Chinese nationals buying luxury products for their family in China?
I mean, I can tell you from my experience on the sales floor, yes, that used to be the case until the Chinese government really cracked down on gifting and the spend levels, etc. But for sure, it was a lot of taking advantage of the price found in the US versus in China, which was for the brands that I've worked for in the past, historically more in China than it was in the US. So family members would definitely take advantage of asking their US based family to shop on their behalf for sure.
Okay. In Canada, we also have a relatively important Chinese diaspora, Patricia, right?
Yes, absolutely. So in Canada, the Chinese consumer is quite a big portion of our population, and really concentrated in Vancouver is probably where you would see it the most, and Toronto as well.
Okay. And you don't miss too much the Chinese tourists, do you? Or it still affects you a little, affects the business?
It has still affected us in Canada quite a bit, actually. And so we are, yes, that international travel has been affecting Canada, and it has affected the beauty business as well, specifically.
Okay. So thank you, Prof. I see a new question about crypto art. I knew this would come, and digital fashion started to be considered within luxury or as luxury. Thinking about millennials and new consumer behavior, I think there was a first problem that took place this week with Hermes, who realized that some, I think it was, what is this platform which is selling NFTs? They were selling the Birkin bag, I think, and there is obviously a copyright issue. So from my perspective, this is absolutely not mature, but I don't know, because I'm not in the US here. So who has maybe some opinions on that? Who would like to talk about the digital fashion, the metaverse, and the crypto art? Has anyone some views on that? Tarika?
Well, I've only begun to learn about this myself. It's all still very new to me, but because I do find it interesting, and I think that at some point it will be a place where a lot of brands will be creating fashion for. But as you say, it's very, very beginning stages of it. So, but it is interesting that there is this millennial, this Gen Z person, or not even young. Because apparently gamers go across all age groups, but these people who are living in these virtual worlds, and they want to look a certain way and have a certain appearance, and they're willing to pay real money for virtual clothing. So I think right now it's more of a marketing exercise for brands to be in those spaces, to increase their brand awareness with this particular population. But I mean, you never know. There might be one day where this will become a real revenue stream for brands selling virtual assets in these spaces.
Okay, I see another question here. Would American brands, and this may be for me, lack of European history and prestige, perhaps one of the reasons why American brands have difficulties? How, in your opinion, can this loss of historical past be bypassed to concrete stronger luxury branding without being bought by LVMH? Yes, thank you for the question, because it's a little bit at the center of what I try to bring tonight in my presentation. Alors, European history and prestige, not only because you have recent luxury brand, Louboutin, think about shoes, for instance. Tarika knows very well. Some of the most prestigious shoes brand, they are recent. They are all born after the 60s. Whether you think about Tod's Group, Roger Vivier Rejuvenation, Malino Blahnik, Louboutin, Jimmy Choo, and I probably forget some. No, in fashion, the game is relatively open. So you can, even in watches, we have Richard Mille, which is a very great case of, I think Eric will agree with me, a respected Swiss watch brand which has no heritage and has been very successful in selling very expensive watches. So I don't think we should look at the heritage as the problem. For me, it's more understanding the business of luxury. And I don't know what my panelists think of that. This is why I explained, for me, it was a paradox that LVMH, who is a European group, was so quick at buying American brands, at also leveraging on all the artistic and streetwear and cultural innovations from the United States to enrich their creativity. So why American brands don't do it more, and why maybe they don't understand better the business of luxury? I think it's, for me, there is maybe, luxury, you need to spend money before you make money. And I think all my students know that. And Bernard Arnault, sometimes he imposed this to the stock market. He over-invested in certain brands. That's why he doesn't show everything, because he wants to be free to spend the money he thinks he should spend. And sometimes, the Kering, it's the same. I remember Saint Laurent, when they acquired Saint Laurent, they had 10 years of losses. And I'm not sure, a company in America, in the context of the financial business culture that prevails in America, I think would be hesitant maybe to invest in a brand and finance losses for 10 years. Here, I don't know, because I'm not American, but I suspect that, the concept of the pressure of the stock market and even of the general business culture on return on investment is not necessarily easily compatible with what it takes to build a luxury brand. I know, because in China, this is the main problem. We have, of course, China is much more new, but we have the same problem in China, where there is ambition to create brands, but the business culture does not understand and cannot accept. So the time frame of investors is not compatible with the time frame of luxury brands. And I guess in the US, it's probably the same to a certain extent. What do you think? What do you guys think? Or in Canada, same.
Yeah. I think you're absolutely right about that. I think that there's a lot of short-term thinking in terms of investments in the US. With private equity, I think they want to be in and out in 3 to 5 years. They want their investment to have increased in 3 to 5 years, and that's obviously not the same timeline that you're talking about in the luxury space. But I do think there is a little bit of this issue of savoir-faire and where these products are being produced, because I know that the factories in Italy and France, these are considered the best at creating these products. And you disagree?
Yeah, no. But Armani, Ralph Lauren is a good case, because Ralph Lauren, when I worked for Ralph Lauren, for the top collections, we were producing in Italy.
Yeah, exactly. And it's the same to this day. The higher end brands in the US are producing in Italy. So I think it's harder if you are not a European to have like a strong relationship, build strong relationships, acquire factories in Europe. And I don't think it's ever going to be possible that you can create the same sort of factory ecosystem in the US. So
it's an interesting point, but for me, honestly, Tarika, I don't think it's that difficult if you recruit the right people and if you put the right money on the table. When an ESSEC who is the person who really developed Jimmy Choo, you know, from the UK, they found the suppliers in Italy, and they built the supply chain, and they were a small company, but and they didn't have money, but they still did it. But he had been working for LVMH 10 years. But I think it's also a matter of hiring the right people, integrating them. For me, you know, Ralph Lauren is the best case. And here I have another explanation to give, if you're interested, because when I worked for Ralph Lauren in Europe at the end of the 80s, believe me, Ralph Lauren had a huge opportunity. Europe was ready to recognize Ralph Lauren as a modern luxury apparel brand. Sportswear, not only formal, everything. They were doing everything. And Europeans loved Ralph Lauren. They were strong in Italy, they were strong in France, the countries where people like to dress. Why they didn't leverage on this to build a strong brand? Alors, sorry to say it, don't take it as something negative, but I think it's really the fault of the management, because they did not focus enough on what was outside of the United States. They had such a strong business in America that they preferred to focus on it. It was easier. And, you know, in Europe, they continued to have licensing, distributors, and even when they bought back, it took them a long time to really invest. And in Asia, it's even worse, because they waited until 2010, and it was really too late, because their previous partners had really, you know, damaged the brand reputation. And the time passed. In fashion, you know, you cannot miss the time. When the time is past, it's much, much harder. So for me, Ralph Lauren is really you know, it's a missed opportunity. And I also believe, this is personal, but it's based on my experience. You know, I think today luxury is a global business. And you need to develop a global, multicultural team. Meaning that, you know, European luxury brands have Americans in Paris. Now they have more and more Chinese as well, and not only French. And L'Oréal, LVMH, they are very good at that. When I was working with Ralph Lauren, and I know even 10 years later, only Americans. And when, you know, they bought back the business in Asia, they were sending Americans who were very far from the reality. So I think it's also sometimes, you know, when you have such a strong local market, it makes you a little bit more lazy to be aggressive on developing internationally. Italians, they never had this problem because they had a very small local market.
So they had to always think globally.
So I think Ralph Lauren is really a shame, because for me, it's a brand that deserves totally. And if you look at the moment, you know, there are only 2 American brands for me who can sell handbags at a certain price point, and it's still Ralph Lauren and Tom Ford. But they are somehow in the middle. Alors, I have a question now for Eric. Very good question. I don't know if Eric can answer that, but Eric, can you please share about the current status of the pre-owned market for luxury watches?
Well, I'm not an expert in pre-owned because I work in retail, the retail channel, but I can share with you that it's becoming more and more a topic that brands are interested in developing some kind of channel for themselves, the brands meaning, to have ownership or control in the secondary market. You know, if you look at the longevity of watches, it's a very long life cycle, right? And if it's properly cared for and serviced, it could be with the consumer for basically their entire life. So naturally, then this conversation of selling and resell and new ownership becomes part of the conversation. For many, many years, or I think still right now, the brands have sort of let the secondary market just do its thing with pre-owned. And there's always this struggle between, do we undermine the retail that we ask clients to pay for, and then what do we then resell watches for? And so it's kind of become very challenging to reconcile both. But I think some brands are very interested, if not in a very small way, looking for very unique vintage pieces that they can incorporate into their retail settings and sort of use that to elevate the new purchases by demonstrating to the consumer what the long-term investment value could be, and perhaps then, you know, over some years you appreciate in value, which is certainly the case for most of the very high-end watches. But it's a segment that's growing tremendously. You know, I think that's what I could share. But I think it's interesting to see how the brands will incorporate this into their current business models, and exactly how it's done in a way that doesn't undermine the retail sales.
Well, it could be actually, in my opinion, Eric, it could even benefit the retail. If you do a comparison with the car industry, a lot of car dealers, you know, do a lot of business with second-hand cars. So, but personally, to give my own opinion here, I'm a great believer in, you know, luxury brands should embrace the circular economy. They should really show the example. And luxury products, more than any other products, you know, have better quality, longer life, and I think it's also a necessity to even if the participation maybe will not be huge, but to participate also in reducing at their level, you know, carbon footprint, inventory. So it also participates in that you know, positive circle. But I know some of the hesitations, but I think it will change. And when some will start, everyone will follow, as usual in the luxury industry.
May I add something for this? And then you have another topic that most of the top watchmakers have a limited capacity for production, and the demand is growing and growing. So this could be a way to take a bigger piece of the cake for them if they start playing this game. That they can, and it's also a way to capture the clients, even especially when you have a really high entry price point. It's also a way to capture the clients earlier in their life.
Absolutely.
So if I don't have 20K for the entry level Patek, but I can buy for 14, okay, now we are competing with an average Rolex. So Patek can catch that client like 10 years before.
Do you think in your region, because I know that sometimes the purchasing power is less, it could be also a good way for luxury brands to increase their penetration?
Yes, for sure, for sure. People are not hesitant on buying secondhand if they buy from a reliable source. And what you were mentioning before, I think that the best industry to look into is the car industry. If you can buy a second-hand approved Porsche or a second-hand approved Ferrari, why are the watch brands not going that way? And we also need to help our clients. I'm going to be a bit like hard on this, to get rid of our product if they don't want it anymore, because we are going to sell something new.
Absolutely, because if you don't, if you're not part of this conversation, they will have the conversation with someone else. You're totally right. I agree with you. I mean, you know, and also, you know, probably all that with the blockchain and with the progress in developing RFID microchips, the problem of authenticity is going to be solved anytime. So in fact, luxury brands, if they really want, everything will be easier, and consumers will be able to find out more and more easily about the authenticity, I believe. So that will also probably increase this business, right? Okay, thank you for your input, Marcos. I have another question here from Maya. I know Maya. She's from Serbia, and she's working in a company which is distributing Nike brand in the region. And her question is, do you think luxury brands go forward in collaboration with sports brands? And can we expect it will be in a way to go closer for consumers? In which way could it be? So she's looking at probably initiating in her region collaboration with luxury brands, collaboration with Nike in particular, or maybe other sports brand they are distributing. I think it's sneakers primarily. What do you guys think? For me, I see collaborations. I will give maybe my answer, Maya. Collaborations, it's getting more and more sophisticated, and luxury brands normally try to apply certain principles. They try to have collaborations which are, if possible, a little bit alternative, and also which tell a story where there is some common territory, or with their own brand, or anyway, they are not collaborating for the sake of collaborating. They are trying to make it meaningful, and also to not dilute too much, what I call their uniqueness. So I think each case is different, and you really have to look at it on a case-by-case basis. But within the luxury industry at large, there are necessarily certain brands which could be interested. I don't know, Tarika, maybe do you have some opinions on that?
Yeah, I don't think collaborations will go away. I think they will continue to happen. I think there'll be more unexpected collaborations. I think it's always any newness. Anytime you bring something new to the table, it creates excitement. So as long as people are still interested in sportswear, those collaborations will continue, absolutely. And I think the more unexpected, the better, honestly.
Yeah.
Two brands that you would never expect together come together.
Yeah, more and more, I think the brands are trying to create some surprise in order to create some buzz as well. So you probably, Maya, you need to help them also find an approach which is a little bit out of the box. Okay, so I have another question here. What are the expectations for the US in 2022? It's true that I talked mostly about 2021. As Tarika mentioned, in the past 2 years, the luxury apparel industry has been supported by restrictions, not allowing other leisure activities, and stimulus checks supporting the economy. So what do you see, all of you, maybe quickly, but starting with Tarika, 2022?
I still think that people will be buying for special occasion. They'll be buying for comfort for home. I think that will continue on. I think that depending on what's going to happen with the variant, with the Omicron variant, whether or not travel will be just restricted or not. I think it's still sort of a question mark on that, whether or not experiences will come back that will be a threat again to luxury apparel spending. I think it's still a question mark.
Do you see, because people, can still practice some sports, and a lot of, I would say, what we call athleisure has been quite a strong driver of consumption.
Yes, actually, you're right. Outdoor activities. So that's one thing that you can do safely. You can go hiking. You can go to the beach. Those are things. So I think anything, any products around that kind of activity, I think you're going to see more of as well. Absolutely.
Okay. And what about 2022 for all of you? Without disclosing anything, but are you globally for the US market at least? Eric, are you positive?
I personally am very positive, and the buzz in the industry is that executives and leaders at watch brands are very optimistic. In fact, some are expecting to hit pre-pandemic levels by the end of their fiscal year for 2021. So in the next couple of months, if not already so, and an overwhelming number of executives feel that they will be on par with pre-pandemic, certainly by the end of 2022. So the outlook is very positive.
But if I may, Eric, they are still lagging behind some of the top luxury fashion brand and Hermes and everything. You saw that they have already
volume, yes.
gone beyond 2019. What about Patricia in Canada, beauty? Are you optimistic?
We are optimistic, definitely. I think, when it comes to different sectors in the beauty industry, we have different levels of positivity. Skincare and hair care have really thrived during the pandemic, and everyone is expecting it to continue that way. Makeup has suffered a little bit more, but in the industry, we're coining the years going forward as the roaring 20s of makeup. So it is a very positive outlook.
All right, excellent. In Asia, we really see the perfume, the fragrance as the new dream category, but it starts from very, very low. So it's probably specific to Asia. This. What about you, Marcos? In your region, how does it look for 22?
We are also very optimistic. I think there are two important pillars. One has to do with retail. The domestic airport business is coming back really strong. Still, travel retail between regions and countries is going to be slow, but domestic tourism is catching up really quickly. And for hard luxury, we still have one competitor that is not performing so well, that is luxury cars. Because of the lack of chips in China, there's no stock of luxury cars, and that's helping us a lot to sell like high tickets, especially tickets over 50,000 USD. So those are two very strong pillars for next year.
And you are talking for Mexico particularly, or for the Latin America in general?
Especially for Mexico. For the rest of the region, there's still a lot of work to do, but as the people are not traveling so often to Miami or to Europe, we still have this opportunity of developing local markets and recruiting clients who used to buy abroad. So for both regions, we are optimistic.
All right, thanks for that. Good news. Another question is, hi Denis, hi panel. First of all, thank you for this interesting webinar. May I have your views on the green transformation impact on the luxury industry? Alors, I will give my opinion quickly, and maybe we can also ask the panelists. For me, definitely, I did a video on that because I also wanted to bring my contribution. I personally believe that luxury brands should be much more active and should not only talk, but should really take a leading role, even if the impact will be marginal. But I think, luxury brands have a moral responsibility, in my opinion, because they contribute to make our planet more beautiful by creating beautiful products. So they are the first who should be highly concerned by the threats on our planet. So they should do it. And there are many ways to do it. The circular economy is one, because you can reduce the carbon footprint. You can, help people recycle some of the products which are sleeping in their wardrobe. Of course, it's about also using here, particularly, you're talking in your question probably materials which are sustainable. So some initiatives seem to pop up. We heard about Kering, LVMH, Hermes, this mushroom. We will see. I think they should do everything they can, and young people, I think in particular, will expect it. And if they don't do it, I can talk for Asia here. But interestingly, in Asia, a lot of Gen Z, their attitude towards brands, especially in fashion, but not only, will probably be strongly impacted by the fact that they seem to take it seriously or not. What do you guys think?
It's exactly the same in the US. I know they've done studies and spoken to Gen Z consumers, and there's a large percentage of them that actively seek brands that have a strong sustainability principle behind them. So it's absolutely the same thing here.
And Patricia, you seem to acknowledge also for you?
Absolutely. I think that that is becoming an expectation of the consumer, is that luxury brands are contributing in a positive way to the environment and the world. And so I think it's not a question that that conversation will become bigger and more brands will embrace that.
Okay. Let me check the time. I think we have probably reached normally the time we had planned for this conference. And by the way, I don't see any more questions at the moment. So anyone would like to add something on this topic or on another one? Marcos?
For this last topic, I think every brand is looking into the future, at least the ones I know. In Richmond is already changing all the packaging. We are trying to work on the way we ship product to reduce the footprint, and we are quitting the use of PVC. That's like going to happen in the next couple of months. So I think even if the impact is not going to be huge for the world, we are all looking into that.
Actually, I also have one wish, but I don't know how long it will take. I think in fashion, there is, of course, even more to do. And I would hope, it goes a little bit against the business at the beginning, but a luxury brand maybe create collections which are a little bit more limited, with maybe also more like permanent articles, and also push what we call made to order, which is of course easier if you carry more important permanent collections. I think this can have a huge impact. Personally, I always predict, from my course, that one day luxury stores will operate with almost no inventory. And this will be also a contribution. How fast is things moving in the US, Erica, in terms of made-to-order manufacturing?
I'm actually not so familiar with sort of made-to-order within American brands. I know that there are certain startups that are in that space, but in terms of the more traditional brands, I'm actually not so familiar with it.
I think it's still probably confidential, but I know that luxury brands are big brands. LVMH, Kering are talking about it. They are anticipating it and trying to understand, at the design product development level, what kind of technology they will need if they want to develop it, at least on certain products. So this is probably less relevant for beauty and watches, but very much relevant for fashion.
Well, yeah, I mean, obviously for fashion, because when you are buying a collection, when you purchase something, you're kind of making a guess that I need 500 units and in a certain size run. It's a total guess. So if we could find a system where we take the guesswork out of it, where we know exactly how many units of each size we need, yes, it would be revolutionary. I agree. And because there is so much waste, there's waste at the end of the season. There's things get thrown away. To eliminate all of that, I think that would be obviously huge contribution to this, to the issue of sustainability. But I also know, and you mentioned about the materials, I think that there is a lot of work that needs to be done on the design side to think more about which materials that we're using, finding materials that are either recycled or that can be recycled easily at the end, and really building that into the design process. So I think there's a lot of work to be done.
That's for sure. That's for sure. That's what we are here for.
Yeah.
Well, again, thank you so much. First, it was great to see you all. We have a lot of American, Canadian students in ESSEC, also from Latin America. Maybe I have some of my Brazilian students who were there tonight in the audience. So it was great to see you. Thank you for taking the time on a Sunday afternoon with the good weather in New York. But thank you very much. And, it's great. We kept these strong links with ESSEC alumni all over the world. So really appreciate. Thank you very much. And thank you, Kanika, for giving me this opportunity. and thank you for those who stayed with us until the end. Thank you.
Thank you so
Thank you,
much.
Denis.
Thank
Have a nice
you.
evening. Bye.
Bye.
Happy holidays.